Hello, and in the past, investors looked for opportunity country by country. Today, capital is being forced to think continent by continent and long term. Africa sits at the intersection of global trade tensions, climate rules, shifting supply chains, and also a massive demographic wave. But is Africa finally being priced as a structural growth story, or is it still treated as a short-term trade? And what role do African asset managers play in shaping where global capital flows? A very warm welcome to this edition of The More You Know. I'm Jeremy Maggs. And today we are stepping back from the daily market noise to look at where South Africa and Africa really fits in the global investment picture. My guest is Derrick Msibi, who's head of asset management at Standard Bank Group and also chief executive officer of STANLIB Asset Management. Derrick, a very warm welcome to you. And let's start with this, and maybe it's a broad canvas question. How do you convince global investors who struggle with the complexity of a myriad of opportunities, instead of seeing the continent as one homogeneous lump, which is often what happens? That's a difficult message to articulate.
Yeah, my thinking around that is that for the markets which are big, which are liquid, which have got a track record of attracting investors, they should do a heck of a lot more to help the other frontier type markets. So if you look at the 2 or 3 large markets, South Africa, Nigeria, or maybe even Kenya, I am not sure that we've done enough to uplift the level of understanding and the level of developing some of those other frontier markets. As I said, my big thrust is Africans should be the one driving the growth of Africa. And so when investors look at all of these markets, they look at the JSE and they're more happy and they see that as a representation of Africa, when in fact it's not. There are other markets which are out there, which they should start getting comfortable with. But they only get comfortable if there's enough of a critical mass of interesting markets. And those critical mass of interesting markets will come from the 3 or 4 leading markets, which I would call the leading steers, driving the growth of the other more nascent markets.
So let me ask you a 2-pronged question then. Why is it the big markets' responsibility to talk up the frontier markets? And how do we start that conversation?
Well, it depends whether you see your growth as being an island. In other words, you see yourself as isolated in terms of the region where you find yourself. Unfortunately for us in our continent, we're not like the US or London or Frankfurt or any one of those big markets. For where we are at, we got to take into account that we're in a particular type of neighborhood. And the
interdependency is important.
Yeah, I'm not convinced that you can have a nice and a shiny house that everybody wants to come to in a bad neighborhood. And so you've got to do something to help in actually improving the context and what's happening in our neighborhood. That's one. And then secondly, some of it is very much the self-interest, which is if you develop a deep and a liquid market in your own country, you'll attract capital from other markets in your regions. And therefore, your own jurisdictions could be a beneficiary. I mean, the reason the US is what it is today is that everybody wants to go and list in New York or the NASDAQ. And what's happened? The US might have a trade deficit, but certainly in terms of financial flows, it's not a deficit. It's a huge surplus because we want to buy their assets. And why do we want to buy their assets? They've got liquid markets, they've got well-regulated, they've got lots of entities that want to showcase their investment offering in those markets. So even if you are sitting as in Nigeria or South Africa or Kenya, you've got to be aware that you could be a magnet. And therefore, even if it's out of self-interest, you should be quite keen to get more people to invest in your market.
And you're confident, are you, that intra-African dialogue with a common purpose is happening? Starting to happen?
Not enough.
Yeah.
Not enough. I think there are some instances where you can see that there's deliberate intentions, because what we see, for instance, in East Africa, they're trying to have a much more seamless market in terms of regulations, etc. I don't think we have spent enough time trying to iron out what is required for that to actually become a reality. There are we are starting to just wake up on the importance of financial markets and capital markets and how those can drive the development agenda.
Derrick, I want to talk to you in just a moment about South Africa's place in this broader African story. But we are recording this conversation in the week of the World Economic Forum.
Yes.
And that could be an entirely different conversation. Yeah. But we're talking trade wars, climate rules, supply chain rewiring, all reshaping capital flows. Do you think we're in a very cold and dangerous place right now, both globally and the impact that's going to have on the continent? It seems the rules change hour by hour.
Well, as Prime Minister Carney of Canada said at Davos, this is a rupture, not a transition. And so it's quite clear that each region or each country will have to choose who its long-term partners are. And I think most entities are sleepwalking, or most countries are sleepwalking into the change dynamic. I agree with Mr. Carney that the liberal world order is not coming back. It's already been reshaped, and therefore we all need to be looking at what does that mean for us? What are the supply chain initiatives we should be driving? Who is really a reliable long-term partner that we should be working with? Et cetera, et cetera. I think if I look at where we are as an African continent, I think we've been completely left out of the conversation. We're certainly not on the agenda, and therefore we're on the menu.
It's a very nice metaphor, that.
on the you can tell I've been listening to Mark Carney because I think it was such a great speech that I've memorized a large part of it.
Some are saying it's the speech for the age, which is important. Let's talk about South Africa's place in the African story. Right now, where do you think we genuinely fit into the investment future? Are we a gateway partner, a competing market? You did mention the other big economies in West Africa and East Africa, but where do we fit right now, and how are you grappling with that particular issue?
We've had I would say a mixed and a bit of a patchy relationship with other parts of capital markets, in that I don't think we've been seen more as a partner. We've been seen more as a competitor. And it is possible that the way that we have behaved has lended a lot of credence to that initiative, which is that we have not looked at how we can develop other markets, how we can bring technology, etc. We've been focused about come to our markets. And so, when I travel and I interact with regulators in different markets, I get responses at times which are welcoming. I get others which are very cautious, which is, are you here to take and not to give? And where we demonstrate that we're really interested in the long-term interests of how capital markets can develop in a particular jurisdictions, we're much more warmly welcomed than when we are more tipping, actually, why don't you invest a lot more in our jurisdictions?
Do you think we're starting to overcome that hubris that you're suggesting?
Slowly. It is something that requires a political intervention on how we are seen in the political sphere, and therefore people are much more comfortable to engage with us. But I think a lot of those conversations are starting to take place, and with the change in the world order, with all of us starting to realize that actually we are much more reliant on each other than in countries outside of the continent, I think there's a lot more room for those conversations, even if we are forced by the crisis which is emerging.
But your argument is also predicated, I imagine, on what we need to fix internally to remain relevant in continental investment flows.
Yeah, look, I mean, if you are the leading economy in a particular jurisdiction, we do need to look at how do we foster our interactions, our trade, our flows with other entities. I don't think there's been enough effort of actually making sure that we get rid of the friction of how we interact with each other. I mean, there's an Africa Free Trade Agreement. I think what's happened there is less than enthusiastic adoption by the leaders of different countries about how we facilitate trade between ourselves. And that's even before you get into flows, into, how much flows in each country. Do we mobilize flows in South Africa to go to other parts of the continent, and what other parts of the continent's flows can flow into other jurisdictions? We haven't even sorted out what are called table stakes, which is trade, and those are matters of survival. Because, trades drive flows, and flows will translate into economic growth, and therefore we will have money to invest. So unless we solve the trade issue, we will have a challenge.
Table stakes, menus. I'm seeing a theme develop in this conversation, Derrick. Let's talk a little bit about structural growth and short-term capital. Are there particular sectors, again, that best capture Africa's structural growth story right now? Infrastructure, digital, energy, trade, consumerism. Where's your thinking in that respect?
It's very interesting that if you look at just general capital markets, where there is some form of stock exchange, and you look at the largest entities, they tend to be either banks, because you need the financial infrastructure to get anything to happen these days. And so banks are usually the first and some of the biggest exposures that you have. And fortunately, over time, the way that banks are governed and run has actually improved. Certainly South African banks are amongst the best run. Other countries have had some challenges with their banking sector, but they've been quite quick to realize the significance and the systemic importance of a very strong and a vibrant financial sector. So that's usually the first one. The second one is telcos. Everywhere you go, because of the digital age where we find ourselves, and the fact that we will frog leap the digital journey that developed countries had. Most of us, when you started by having a voice phone, and then there was a post office, etc. A lot of stuff now is happening on the mobile. So mobile opportunity plus all the ancillary services that are coming into mobile are the second largest opportunity. The third one is infrastructure. There is not, and you can see what's happening in infrastructure. I'll give you an example. If you look at the major ports in our continent, look who's investing in those ports. Dubai, the Chinese, etc. What are they seeing that we are not seeing? Okay, so those three to me are amongst the most crucial. I'm assuming that the consumer stuff, the Unilevers and all of those people who sell stuff that we need to just survive, that's par for the course.
Let's move the conversation to the role of asset management. What responsibility do African asset managers have beyond simply delivering returns? There's an element of philosophy there.
Well, the first thing is that if you're going to be a successful growing economy, you need to have a pool of savings that's going to fund your development. And you only develop a good and a sustainable pool of savings where money is professionally managed. And that's where the asset management industry comes in that we give people confidence that if their money is managed professionally, they will achieve their own returns as individuals, but at the same time, they will mobilize the capital that's required to fund and that's improve the overall standard of living in any particular country. So that's the first one, which is we give confidence to savers for that. The second one is we create a massive ecosystem that drives employment. I don't think a lot of us fully understand that if you are investing, there are 5 or 6, if not more, touch points and people who are actually employed to look after that. There's an asset manager. The money has to be paid through a bank. It has to be managed by a custodian. Someone has to administer that. And that is a massive employment creator that we as asset managers facilitate and catalyze to drive the growth in the country. The third one is obviously capital markets, is that where there isn't a vibrant and deep and liquid capital markets, the ability to attract investments, to crowd in investment from other jurisdictions is quite limited. But in order to do that, you need to have people who are market players. Market players could be banks, could be stock exchanges, but the investment community is usually one of the bigger players in capital markets. So those are the 3 key roles that we play over and above just delivering returns.
You talk about facilitation and capitalization. Is it an overreach to say that asset managers are actively shaping development outcomes, or is that expecting too much, do you think, from capital markets?
I would say that whether it's expected, it is a responsibility that's been foisted upon us as asset managers. I don't think we chose it, but in light of the fiduciary responsibility that we carry to be custodians and guardians of a nation's capital, it means that it comes with a level of responsibility which we can't just deny or ignore. And so my view is, that's our responsibility. And if we don't deliver on that, I doubt that the long-term sustainability of asset management and its relevance is going to be there. In 50 years' time, will be completely irrelevant.
Let's start winding up and looking ahead. What do you think, and again, it's a continental question, what do you think that Africa needs to prove over the next 5 years then to change how global capital sees it? You've listed the risks, you've spoken about where the opportunity is, but what's the proof point now?
I think the first one is that we need to have massive financial reform, which is that we've got to adopt some of the best practices about how well run financial markets and financial ecosystems.
Give me an example.
So if you look at I'm always fascinated by a country like Singapore. If you look at how their banks are regulated, what regulations they follow, what technologies are they adopting, et cetera, the registration, the oversight of all of those institutions.
It's about speed and precision.
Yes, it's about speed, precision, adequate oversight, that there is someone who's paying attention to what those institutions are doing, and that the executives and whoever is running those institutions are fully aware that there's someone watching what they're doing. So that's the first one, which is develop a really robust and acceptable financial system. The second, reformation. The second one is that we've got to figure out how we're going to grow the savings pool. And if you look at the countries that have grown savings pool aggressively, it's always been led by some form of pension reform, whether it's the superannuation opportunity in Australia or what the Nigerians have done. And obviously South Africa has had a long track record. We've been having our pension system since 1956. So a lot of that, in order to mobilize savings, we need that reformation of the pension so that we can create a long-term pool of capital.
What further reformation do you think is needed locally?
I think stop people from drawing money from their pensions. That to me is the biggest leak.
I'm hearing the two words, two-pot. Yeah.
That to me is the biggest leak that we have in our pension system, is that money comes in, but there's a lot more money going out now than money coming in, which is not great for the long term. The third issue that we need to be looking at in terms of how we drive the improvement is financial literacy. We've got to get people to understand what it means to manage their own wealth, how they get educated. We educate people about lots of things. If I look at my kids at school, they know about everything other than how to manage money. And these people are going to be spending, when they are working, they're going to be spending 8 hours a day working, earning something, but we don't tell them, once you've earned your money, what do you do with it? And so financial literacy has to be something that we aggressively embrace.
I have a horrible feeling, Derrick, that in my case, it's my children that manage my money. But that's an entirely different, it might be the same for you too. If you were advising a young African investor today, should they be looking locally or globally?
I always advise people to be diversified. Certainly, it's very difficult to put all your money locally. So I'm not in the camp of either or. I'm more on the camp of and. Because if you're a young African, the investment opportunity set that's available to you locally is quite limited. If you're looking at just your own jurisdiction, your own country. If I'm sitting in, Angola, my opportunity set is either I'm going to put my money in my bank deposit, or maybe I'll find some unit trust, which is invested largely in government bonds. That's a really great outcome for me for the long term. So I need to have something that enables me to get exposure. And so my view is, based on the size of our markets, if you're looking as a long-term investor, I would say probably at least half of your money should be outside of your own geography. There could be some that you live in your own geography, home bias, but to have all your eggs in your own country, I don't think that's a really smart idea. My personal philosophy is an investor and his or her money Not all of it should be in the same country as they are in.
Leave us with a note of optimism as we start 2026, and it seems like we've had 1 year packed into 1 month.
Yeah.
Are you bullish about 2026?
I'm cautiously optimistic because every grey cloud has a silver lining. So the disruptions and the gyrations that we are seeing right now, they create opportunity for someone. And so I think the reshaping that is taking place now is a very good opportunity for all of us to reassess on who our friends are, who in the long term will remain an acceptable and a desirable investment destination. And what excites me is that it is very clear that where historically we've had a default as this is where you put your money, that is being questioned. And therefore there is I wouldn't call it a frantic search, but there's certainly a great deal of interest in looking at what has been traditionally ignored markets and what they offer. And I think with the rebalancing that is clearly taking place now about where investors used to invest and what they think they should be investing in, we've all got to be raising our hands and saying, please come look at us, because we think that we can be a viable alternative. To me, that is the opportunity. I understand. It's the clouds are gray. The sky is not blue. But even in that situation, I think there's an opportunity for someone.
Derrick, thank you very much indeed.
You're welcome.
Derrick, that's where we're going to leave it. And that is all from The More You Know. Very quickly, what today's conversation, I think, really shows is that Africa's investment story isn't about waiting for perfect conditions. It's about recognizing structural change while it is still unfolding. Capital, policy, demographics, and climate all colliding. And the decisions being made now will shape where growth shows over the next decade. I look forward to your company next time. STANLIB Asset Management Pty Limited is an authorised financial services provider in terms of the FAIS Act. This content should not be construed as advice.